Thank you for tuning in to the Practical Preservation Podcast. Please take a moment to visit our website, practicalpreservationservices.com, for additional information and tips to help you restore your historical home. If you've not done so, please subscribe to us on iTunes, Stitcher, or SoundCloud, and also like us on Facebook. Welcome to the Practical Preservation Podcast, hosted by Danielle and Jonathan Kepperling. Kepperling Preservation Services is a family-owned business based in Lancaster, Pennsylvania, dedicated to the preservation of our built architectural history for today's use as well as future generations. Our weekly podcast provides you with expert advice specific to the unique needs of renovating a historic home, educating by sharing our From the Trenches preservation knowledge and our guests' expertise, balancing modern needs while maintaining the historical significance, character, and beauty of your period home.
Today on the Practical Preservation Podcast, we have Kevin Sullivan with us from the National Trust Insurance Services. Thanks for joining us today.
Yeah, glad to be here.
Yeah. Okay, so tell me a little bit about your background.
So I am an insurance agent. I have been an insurance agent for about 15 years, but I've been with National Trust Insurance since about 6 or 7 years. So really we're kind of a specialized agency, which what I'll talk about, but all I do is I work with the owners and stewards of historic structures. So,
okay.
Yeah.
Okay, very good. And so and that kind of leads us into, what is the National Trust Insurance Services?
Yeah, so in a roundabout way, National Trust Insurance is a specialized insurance agency that only works with the owners and stewards and operators of historic buildings. So most commonly, you'll think about historic house museums and historical societies, historic theaters, historic hotels, historic real estate, homeowners of historic houses, really anybody that owns a historic building. So we were created in 2003 by the National Trust for Historic Preservation. So we are a subsidiary of the National Trust for Historic Preservation. And really we were created out of need because a lot of the membership of the National Trust didn't really have proper insurance. The insurance industry as a whole didn't really know how to handle and properly insure historic structures. So we've worked with various insurance carriers to come up with customized policies so that, at the end of the day, you carry insurance for if you have a claim. And if you need to rebuild or fix or restore a historic building, we need to make sure that there's proper historic materials and craftsmanship and architectural features available so that the historic elements are repaired.
Right.
Now, obviously, we can't replicate history, so we can't, if there is a large or even a catastrophic claim in a historic building, the history in a lot of senses is lost. But most commonly, it's 95% of all property insurance claims are partial in nature. So you're constantly trying to fix a damaged portion of a building so that it matches the undamaged historic parts of the building. So,
right.
And then we have a few thousand clients nationally, and we work in pretty much every state. So we're based in Baltimore.
Okay.
Yeah.
Okay. And let me see. So you kind of touched on it, but talk to me about how insuring a historic building would be different than like just going and buying regular homeowners insurance.
Yeah. So if you think about, let's just use round numbers. Let's say there are 100 insurance carriers out there, and you can be insured with one of 100 different insurance carriers. Well, not all 100 are created equal, and the insurance policies of those 100 carriers are all kind of different. Relatively, they're the same and they serve the same general purpose, but the wording within the policy is all different. So let's say you owned a historic house or a historic commercial building, and sometime in the middle of the night a water pipe bursts and you come in the next morning and you've got a building that's 80% undamaged and historic and grand in every way, and then you've got 20% that's rubble,
Right.
Rotting plaster and ruined hardwood floors. You're going to lean on your insurance carrier to make sure that the policy provides enough coverage, both limits and the coverage wording, to allow you to restore the damage so that it's like it never occurred. And most off-the-shelf homeowners policies, unfortunately, do not protect the historic elements of the building.
Right.
The common example we'll give is, most insurance companies will tell you, all right, Home Depot quality materials, modern materials. You're going to replace drywall or plaster with drywall. You're going to replace oak floors with pine floors. You're going to, basically try to fix it as most affordably as possible.
Right.
So where we come in is we partner our clients with the insurance carriers that, for lack of a better term, aren't as cheap, that don't nickel and dime you as much as other carriers that recognize a historic building is going to need more expensive materials, more expensive labor costs, unique artisan contractors that might not be generally available. So that's the main difference. But there's a couple other nuanced differences, which I can get into.
Oh, sure. Feel free.
So, I think, one of the things that comes to mind is, the question we get is, well, how do we insure an older building? And when you look at, when you talk to an insurance agent, and I'm an insurance agent, most commonly people look at their limit of insurance. They might look at a building and say, or a house, and say, okay, I've got a 5,000 square foot building, and how much should I insure it for? And, insurance agents all over the country will range in their recommendations. Some will say $100 a square foot, which would be $500,000. Some say $200 a square foot, which would be $1 million. And some say, $300 or $400 a square foot. And that's a huge range. And it is huge, yeah. And people often, and understandably so, they tie their building limit to their premium. I mean, nobody wants to overspend on insurance, and, myself included. Insurance is a necessity, but you don't want to go broke buying insurance. So, when they look at their limit of insurance and what they pay, they most commonly say, well, hey, if I carry a lower limit, maybe I'll save a little money, which could be true in some instances. But that's the topic that most people want to focus on, is what are we insured for? And the answer is that, unfortunately, historic structures need a higher cost per square foot. If you took a modern townhome that was built in 1990, you might be able to get away with insuring it for $100 or $150 a square foot, because if something happened, you can go to Home Depot, you can get
just buy those materials,
you can get those materials affordably, and the contractors that can fix that damage are plentiful. There's plenty of general contractors that can do it. But if you have a historic building with superior materials and harder to track materials, and the workers, the artisan contractors that can do that kind of work are not readily available, well, then you need to spend more. So as a result, you should carry a higher limit of insurance. But buried within that insurance policy, most people look for the limit, and they say, all right, here's the limit. Great, I'm carrying a healthy limit. Even if you've decided, hey, I'm going to carry $300 a square foot, and you feel comfortable with that limit, it still doesn't answer the question of, well, how is the carrier going to agree to fix your building? And within the policy, there's all these clauses, and, insurance policies are 100 pages long for a reason, because there's a lot of ifs and buts, and here's what we'll do, and here's what we won't do. And there's something called a valuation clause. And the valuation clause is basically the agreement that the carrier is making for how they're going to fix your building. Not the limit. That's separate. This is more of the how. You could have a small claim, a medium claim, or a large claim, and the valuation clause is going to dictate essentially what the carrier is going to agree to do. So a good insurance agent should focus on the valuation clause. There is, now that the insurance kind of market is coming around to historic properties, there are valuation clauses that are crafted for historic property owners that will say in very specific terms that we will replace the same historic materials, the same craftsmanship, the same architectural features. It's kind of like the gold standard, and that's what you want. That's what you should try to focus on, is that type of stuff.
Yeah, and I know sometimes, and I can't remember what the other phrase is, but like the replacement versus, I can't remember what the other word is, but I know that's also like an issue, because when we purchase our house, and our house is just, we live in Lancaster City, we just have like a 1920s duplex, but it's brick. It's three layers thick. And when we were talking about insuring it, I know that, like I said, no, we need to insure it for a higher amount, because if something would happen, and then we had a claim like 10 years in, and we had to fight with our insurance agent, or not our agent, but our insurance carrier for 6 months before we finally got the entire claim covered. It is. Even though I knew a little bit.
Yeah. No, you were close in your terminology. In fact, you were right on one. So replacement cost, I'll say that. Okay, there's the worst, there's the medium, and then there's the best. The medium, which is called replacement cost, that is the most common, which is the agreement that the carrier is going to use the same materials, relatively speaking. They use kind of vague terms. They like, kind, and quality, which is a subjective term. Isn't the best. The worst is what's called actual cash value, which is similar to auto insurance. If you were driving around town in a 1995 Toyota Camry and you totaled it, well, your insurance carrier is not going to buy you a brand new Toyota Camry because you weren't driving a brand new. They're going to give you the depreciated amount, the Kelley Blue Book value of your depreciated 1995 Camry. So what they do is they take what a new Camry would cost and they depreciate it down to the 1995 level, and they give you a check for a couple $100, because what's a depreciated Toyota Camry worth? Not much.
Right.
In property insurance, that's very bad, because let's just say you had an actual cash value policy and you have a small fire, and you get some contractors out there, and all the contractors say, we can fix the damage for $100,000. You get another contractor out there who says, I can fix it for $100,000. You get another contractor out there who says, I can fix it for $90,000. So it's kind of the damage is somewhere in the $90,000 to $100,000 range. But then your insurance company says, okay, it's going to cost $100,000 to fix it, but that's before we depreciate it. So they're going to depreciate all the materials, and you might get a check for $30,000 or $40,000.
Right,
which is
I've
not
seen
good,
that.
Because you have $100,000 of damage, you have to spend $100,000 to fix it, but you're only getting a check for $30,000. So actual cash value for a historic property is pretty bad. That's kind of the worst. But unfortunately, some carriers, that's all they'll offer for a historic property. Replacement cost, again, would be the middle, and that's the most common. But the gold standard is something called historic replacement cost, which is more prevalent in the commercial insurance world, his house museum type stuff. But also you can get from homeowners, which basically says, it removes all subjectivity, and again, it says we're going to use the same historic materials, the same craftsmanship and architectural features, which is very black and white and very good. So, I saw on the website that
you also offer other types of insurance, like insurance, like I guess it would be more for like the house museums and things, like the board members, that kind of coverage. Are there other insurances that you provide?
Yeah, so to kind of simplify it, we're broken into two areas. One is historic homeowners, so individuals, homeowners policies, auto policies, umbrella policies, jewelry policies, fine arts policies, those type of things for the average homeowner who might live and reside in a historic home and all of their family insurance needs. We can do all of that. But most of what we do is commercial insurance, where we work with mostly nonprofits, so it doesn't have to be a nonprofit, but 90% of who we work with are nonprofits. And they have needs aside from just the building insurance. They have general liability insurance because they might be operating a museum or a historical society or a hotel or a theater or whatever. There's directors and officers liability, which protects the board members of these nonprofits against allegations of breach of duty or bad decision-making by the board. It could be misappropriation of funds. It could be, anything. And then there's various types of just incidental, miscellaneous insurance policies that are part of every organization, workers' compensation insurance and volunteer accident insurance and employment practices liability insurance and cyber liability and auto liability and umbrella liability. I mean, there's a whole world of insurance that organizations should consider. So in that sense, we're just like any other insurance agent. We work with a large network of carriers, and we do it all.
Okay. Well, and that's good to know, because I would have made the assumption that you just, covered like properties, and so I'm glad I asked that, because it's good to know that someone could come to you for all their insurance needs rather than just, having to kind of piece their insurance together. I think you get better coverage that way, making sure everything, there's not gaps.
Correct. Yeah. You should primarily work with one insurance agent. It's recommended. A lot of times you'll have people that want to break it up, and because they're trying to appease different, hey, I want to work with this agent because he's a friend of a board member, and this agent because he's my neighbor. But a true insurance agent is looking out for your organizational risk, and if you've got two people that aren't communicating, you could definitely have a gap in coverage. Yeah. You really shouldn't. Yeah, it's not recommended to do that. So
do you have any, and I think we've covered it, but maybe there's something else that I haven't thought of, is there anything, do you have any tips for our listeners for insuring an older building?
Yeah, I would just really challenge your insurance agent to, focus on what building limit would be appropriate. A qualified insurance agent can really help. We can certainly help in that area, but if you just wanted to stay with your current insurance agent, you just really want to try to nail down your building limit and what should be an appropriate limit to carry. There are penalties built into policies. It's called co-insurance. It's a penalty if you have a claim and it's determined that you're not carrying a high enough limit, where it can really cut your claims check. So there's all these kind of mouse traps built into the policy, and not that the insurance carriers act in bad faith, and quite the contrary. I think most are great A-rated carriers that have great reputations. But you just want to make sure that your insurance agent is covering, speaking with a lot of different insurance carriers, and if you ever needed a second opinion, you should always reach out to another insurance agent and just try to end up partnering with one that thinks that understands your needs better.
I think that's good advice. And I think sometimes to make sure that somebody really understands what your goals are, and that you don't just want an insurance policy to fulfill whatever requirement you might have for your mortgage or whatever. You want to make sure that you're going to be able to bring it back to what it was or what it is.
Yeah, I mean, that's the common challenge that I think any consumer of insurance battles is. Again, no one wants to overpay for insurance, and I'm included in that. But at the end of the day, you're buying insurance for a reason, and you're buying it because in the unlikely event something goes wrong, and it could be once a year, it could be once every 10 years or whatever. But when that bad thing happens, the last thing you want is to be treated poorly. Or not fully understand how your policies are going to trigger and react. And So we've often found that the good carriers, the ones that truly understand historic buildings, not only provide better coverage terms, but they can give you a higher limit for less money, meaning they're just more comfortable with the historic building, so they'll say, whereas carrier A that might not feel super comfortable insuring a historic building, they might charge you whatever, let's just say $5,000 for a $500,000 limit. But carrier B, who feels very comfortable insuring a historic building, might give you $1 million limit for $3,000. So there's not always this comparison that the limit, sometimes you just need to be with a carrier that knows how to insure a historic building, and thus they're more comfortable doing it, and then they'll charge less because they're more comfortable doing it.
Yeah, I agree. So do you see any trends or challenges in preservation?
Well, I have two comments. One is timely, which is coronavirus kind of related, but the general kind of consistent trend or issue is, the building itself. So, historic buildings are historic based upon age. 50 years or older makes it historic by the standards. But we all know that there's a big difference between a 1910 restored, well-maintained, well-funded organization that is constantly checking to make sure the roof is okay and electrical repairs, and it's they've spent the blood, sweat, and tears to make sure the building is restored. And conversely, a 1910 building that's pre-restored, an organization that might still be trying to raise money, a capital campaign to do something, and obviously not all historic buildings are created equal. So oddly enough, most people think that the age of the building is one of the bigger factors. They'll say, my building was built in 1890, and no insurance carrier will consider it because it was 1890, when the truth of the matter is most insurance companies would rather insure an 1890 building that is restored and well-maintained and has, than a 1950 building that is dilapidated and not maintained. So the age is
there's more risk there.
It's how the building is cared for, and that's kind of where you're going to get the most bang for your buck price-wise. And then in terms of another just trend is obviously coronavirus, which is, organizations are shut down, and there's something called business income insurance, which is what keeps you operational and afloat if your building is shut down. And unfortunately, most insurance carriers did not consider the likelihood that a non-property related claim would shut down a building, meaning most property insurance carriers require that there's some sort of physical damage. Well, duh. I mean, they thought that's what they were going to do. There's a fire, a water pipe burst, a hurricane, an earthquake, something that shuts down the building, and then they'd be gladly pay business income insurance. But now we're in this world where people are trying to file property claims, business income claims, but their buildings are fine. Their buildings are just closed. There's nothing wrong with it.
But then they don't have that triggering claim.
That's right. So there's in the back end, there's just a lot happening. Most insurance carriers, unless you have some sort of, you're fortunate enough to have some sort of communicable disease wording in your policy, which is kind of rare, but does exist. But 95% of commercial policies just flat out are getting denied because there's no property claims. So no property damage. So, in terms of trends, that is what you want to keep your eye on as an organization, because you're starting to see some lawsuits be filed by various plaintiffs. I know, like Wolfgang Puck, the restaurateur, and his partners have filed a lawsuit alleging that you don't need physical damage to have property damage. So lawsuits like that could really dictate how the insurance industry is forced to respond to this. And
right.
so legislation. I mean, President Trump had said something a couple weeks ago about the topic of business income insurance and pressure legislation. All of that could really shift whether organizations who are getting denial letters for their business income claims are maybe going to luck into some sort of backdoor legislative type thing where insurance carriers have to change their tune. So that's going to be ongoing, and it's not going to be quick. It's going to happen over the next couple of years.
Yeah, is the industry though concerned about the amount of claims, like the dollar amount that would have to be paid out on those interruption claims?
Yeah, I mean, it is the difference between the insurance companies coming out of this very financially stable and then coming out of this essentially insolvent and potentially bankrupt. I mean, it is that black and white, because the topic of is physical damage needed to trigger business income, is property, physical, like tangible properties that need it. That deciding factor is going to be the difference between whether they pay no business income claims for any of their clients and they're out in the clear, or whether they have to pay for every single one of their clients for a significant amount, which, insurance companies don't have insurance companies keep what's called reserves, which is money in the bank to pay claims. And they calculate their reserves based upon, probable bad years. This would be such a historically bad thing that it could very easily wipe out a big chunk of the insurance market, which would then, frankly, insurance companies aren't in it for free. They're trying to make a little money.
It will raise
they have to really increase their rates, and the premiums would go up. So it would be a mess, frankly. So it's kind of to be determined on who's going to win that argument.
Yeah, I've been watching that too, because in March when everything's kind of started shutting down, I'm like, I know we have this interruption insurance, and then I thought that no, they said like that's if we have a fire. Like I went through that whole thing in my head.
Yeah, it's the same process. Everybody's going through it. Yeah, and it is what it is. But at the end of the day, I don't know where personally it's going to land, and
it's going to be interesting to watch. I agree. Yeah. So, is there anything that you wanted to share that maybe we didn't get a chance to cover, or we didn't talk about?
No, I think we covered a lot of it. I would just again, now is the time, to look at when your businesses and organizations might be at their slow point, to just maybe take a closer look at your insurance policies, talk with your insurance agent or talk with another insurance agent, just try to better understand what you have. I think insurance is one of those things that kind of rolls over, and especially the organizations, nonprofits that have board members that roll over, and they'll say, well, so-and-so put these policies in place 7 years ago, and they just kind of renew, and no one really knows a lot about it, so they just renews, and then maybe at some point someone gets a bug up them and they say, I'm going to take a look at it, and then they realize that everything was off and wrong and limits are low and aren't insuring locate. Like, you should really keep an eye on it and make it a practice to review your insurance with your agent maybe once a year at least, just to make sure everything is right. And that's a lot of the calls we're getting is people that are candidly, because they're shut down or,
they have time. There's time to think about that stuff. Yeah.
So I would just recommend that. And that's really everything.
Okay, very good. So how can someone contact you?
Well, that's a good question. We National Trust Insurance. You can Google us. We have a website. Though I'm a little embarrassed to admit that I don't know if I know exactly. I think it's nationaltrust-insurance.com, but you can just Google National Trust Insurance, and I think we're pretty easy to find. And I'd love to hear from anybody. I also, as we participate with the National Trust for Historic Preservation, they have a lot of conferences. I'm on the board of a historic theater group, the League of Historic American Theaters, which is another great organization. So we're trying to put ourselves out there and make ourselves available as
Okay.
best we can.
Okay, very good. And I'll make sure that your contact information is also on our website where the podcast will be hosted. So then it'll be there if somebody needs it to go back and look.
Great.
Okay. Thank you very much.
Okay. Take care.
Okay.
Bye.
Yeah.
Thanks for listening to the Practical Preservation Podcast. The resources discussed during this episode are on our website at practicalpreservationservices.com/podcast. If you received value from this episode and know someone else that will get value from it as well, please share it with them. Join us next week for another episode of the Practical Preservation Podcast. For more information on restoring your historic home, visit practicalpreservationservices.com.